U.S. banks have raised more than $500 billion to cushion against losses since the credit crisis began. Well, now one Deutsche Bank analyst, in fact, says it's still not enough. How much more money will they need? Let's bring in our own Zara Burton to find out. And Zara, I mean, how big of an impact is this having on bank shares? Or let's talk about actually what's needed first of all.
All right. Well, we're talking about $300 billion, up to $300 billion more in terms of new capital. This is what this Deutsche Bank analyst is saying, and this is all because of what's going on with the credit markets and new losses that are expected. Of course, we got that report this morning talking about home equity loan delinquencies rising to a record. That's not going to help them. This analyst saying that going forward into 4Q, because remember, on the street, everybody's expecting that they're going to have a very robust, compared to last year, a very robust 4Q. They're saying over at Deutsche Bank, you know what, that's not going to happen. In fact, losses could extend into 2010. So very negative report. In terms of what's going on with the overall reaction in the stock market, there you can see it's a mixed trade, mostly lower for some of the banks, but not all of the banks. In fact, one of them, U.S. Bank Corp, is actually rising there. You can see 1.5%. And what this, even though it's not having a major effect on the overall market today, if it is true, it definitely could have an effect in the coming weeks. And remember that financials were responsible for much of the rally that we've seen in the past couple of weeks, especially since the March lows. Carol.
Well, which is why when they report earnings, it's going to be so important, Zara. So I'm curious if you're hearing that any of the banks expected to kind of buck the overall trend when they report those earnings results in the next quarter.
Well, Deutsche Bank talked about that today. So they cover about 16 banks in total. They don't cover Citigroup and JP Morgan Chase. Deutsche Bank saying, though, that Wells Fargo is going to have the strongest quarter because of robust mortgage and trading results, plus their strong balance sheets. Now, they talked about the worst of the lot as well. And you're looking at Cleveland's Key Corp, Zions Bank Corp, that's over in Salt Lake City in Utah, Atlanta's SunTrust Banks, Wisconsin Bank, Marshall and Ilsley. Those stocks shrugging off today's report. But again, Carol, if this report were to be true, that they need to raise another $300 billion, a lot of these banks came out and said that we're raising capital. Discover Financial, I know, is also in today's session lagging the broader market today because of what's going on. They have to raise capital. Of course, that's trying to repay some of their TARP money. But overall, I mean, if this is going to happen in terms of these capital raises, that's going to be a negative for these stocks going forward, Carol.
Yep, something to keep an eye on. All right, Zara, thank you.